Price, is Wall Street's optimism justified, or are we just being fooled?
On a day like today, you need to hear from our Bulls and Bears. We got Bob O'Brien for you, Peter Schiff, Pat Dorsey, and Gary Kaltbaum. Peter, on a day like today, does it make you cry? I mean, you're all invested in gold. Gold is down about $20 an ounce. Stocks are way up, particularly the financials, which you said we're never going to gain any footing. What's happening?
Well, they're not really getting any footing. This is quicksand.
No footing? Did you see Wells Fargo? 32%? Are you kidding?
It's short covering. I mean, it caught the shorts by surprise. The financials are still going a lot lower. They're going to be going lower for years. I don't care if they had a good quarter. The next several years are going to be a disaster for Wells Fargo. Anybody with exposure to the American consumer, whether because they borrowed to buy homes, or because they have credit card debt, or they borrowed for cars, they're going to lose a lot of money. This is a typical bear market rally. How many days have we seen these spectacular head fakes? And yet, fast forward a few weeks or a few days, we're on new lows. This is nothing different.
You know,
Bob
O'Brien, it's hard to disagree with Peter at a time when you see Freddie Mac, Washington Mutual, E-Trade, trading at levels of what the price of a gallon of gasoline is, or, a gallon of milk is. Holy cow. But, we're getting some good tech names coming out soon. We've got Google, IBM, Microsoft reporting. Intel's, margins hanging in there. What do you think?
Well, as Peter mentioned, these bear market rallies can be vicious. You get a short spike, and it comes right back. And as you point out, Liz, you look at these stocks, you look at the airlines, $5. It doesn't take much to move this along. I think fundamentally, though, the one encouraging thing I've seen this week, the volatility index, the VIX, finally got above 30 yesterday, and as soon as that was the first time since March, and as soon as we hit that 30 threshold yesterday, the market did one of these and came right back up.
Right. They did
and even though it sold off late, it
well, and Gary Kaltbaum, it's hard to keep a lot of these stocks. Meredith Whitney had a bad reporting on Wachovia yesterday. Wachovia was up with the rest of Citibank was way up today. So is now the time to go into financials?
I think you have a trading rally in the financial stocks, but you have to keep it all perspective. I got to tell you, I was scanning these stocks today, and I noticed Bank of America up 15, 18%, and then I looked as of May 2nd, it was down 55% from that day to then. So you've got to realize these things have been trashed. It is normal to bounce. For me, there's one little, two words, follow up. Give me some follow up to tell me the big boys are going after. Let me give you one note. Volume was not heavy today. On a big day like today, you want to see monstrous volume indicating the big boys are buying. They were not at it. Reminds me of a lot of short covering.
Right. Pat Dorsey, all holy hell broke loose when Lehman Brothers came out and said Fannie Freddie, $75 billion losses, new accounting rules. We have J.P. Morgan Chase, Merrill Lynch, Citigroup coming out with earnings this week. You think we can have a two-day rally, which the market is looking for?
Well, expectations are pretty darn low for most of these companies, so I wouldn't be surprised to see the numbers come in and, make the street a little happy with them. I think, though, that that notion that this is not the beginning of a new bull market and more of a shorter-term rally does hold a lot of water, simply because, what we've had so far is really just a financial crisis. It's just starting to seep into the broader economy and really start to take a toll on corporate earnings. And what that means is having sort of a V-shaped recovery in corporate earnings overall. It's hard to make the case for that.
Right. Thank you.